Welcome back to Trader UK, the money management channel. Recently, I've been hearing a lot of hype surrounding a plant-based food manufacturer. The name of the company is Tattooed Chef. So I'm not going to waste any time today. I don't want this video to be too long. I'm going to be reviewing a webinar starring Sam Galetti. This is the president of Tattooed Chef. We're going to run through the webinar. It's actually just over an hour long. If you want to know a bit more about the company in detail and the people behind it, go and find this one. For the purposes of today, I've cut it down. I've found the key points and I'm going to run through them now, give you my commentary and what I think about this company. So let's get going.
Okay, so I think we're good to go. Let's get started. Thanks everyone for joining us today. I'm George Kelly, a consumer analyst with Roth. We're excited to host the team from Tattooed Chef. So with us today from the company is President and CEO Sam Galetti. Dialing in hopefully shortly is COO Stephanie Dykman, CFO Chuck Cargile is on the line, and Rachel Perkins-Olsch, who is Investor Relations. So thank you all for participating. So let's get started. So I want to start just with some background. And Sam, given that you've only been public now, the transaction closed, I guess, maybe just around a month ago. So I was hoping that you could tell us about yourself and your background just in the industry. I think a lot of people on this call today are going to be somewhat new to the story. So if you could take us through that, how long you've been in the food industry and how you got the company started.
Sure. So thanks so much, George, for giving me the opportunity to talk a little bit about Tattooed Chef. I appreciate it. I've been in the food industry my whole life, about 35 years. I've built several food companies, in many different food segments that I've had the opportunity to actually sell as well. And so in a million years, I never would have thought that I ever would have taken a company to a SPAC with this situation. It was just a really amazing situation that happened. Always been a family business, privately held. I've always owned and operated the businesses. Manufacturing has pretty much been 90% of my life's experiences in the food industry. And so I'm very familiar and comfortable with manufacturing. So, and then I started this company about 15 years ago now, and I was actually in between. I had just recently did a deal with actually it was called Sonora Mills, which is Pop Chips, and it was one of.
Okay, so first of all, I think that's fairly noteworthy. Sam Galetti, the guy on screen now, president of the company, born of the food industry, food production industry. He spent his whole life working in this industry, so he's going to know it very well and how it works. And I'm sure he already has some good relationships as well. Also, the fact that his experience lies specifically within food production or food manufacturing, that's really going to help this company scale up. The main problem that most of these small companies face is trying to scale up their operations. So to try and reach the wider market. So I think that's going to be really useful. Just a key point to note there.
Things I have done in my food career is that we took over this rice cake manufacturing company. And as always, since private label has always been where I've gone to in the market, we started building this just rice cakes and mini rice cakes. We had Hain as a co-packer. And anyway, one thing led to a next. We started popped pellets, potato pellets in our extrusions and our pellet machines. And we started making popped potatoes. And then Keith Billings and that whole group from Pop Chips came in and acquired us. And it was one of the transactions that I have been involved with. But I was in between and businesses. And so I started importing some foods from Italy. My background, I have family in Italy. I'm very comfortable with Italy. And so I started importing some vegetables and some different products and selling them to private label, as I've always done in my career, is really private label, Trader Joe's, Whole Foods. Those have always been accounts that I'm very familiar with and have dealt with in my whole career. And we were building, and from importing these vegetables, the demand for vegetables just started growing. So I stepped back in and got a plant in 2015, 2016 in Southern California to start producing more food products to go after our private label base. And then again, just the vegetable world, rice, cauliflower hit the market, and we had this huge demand start happening. And so I stepped into the plant in Italy in 2017 to be a direct manufacturer of rice, cauliflower. And today we are the biggest rice cauliflower manufacturer in Europe. So, but really the really cool thing that happened was in 2017, my daughter has been involved. We're a family business. I mean, it's me, my wife, and my 2 kids. Always they're with me. And so, Sarah, she's always been, our, the last 5 years, she really made a huge impact and always an innovation. She has a great view and vision of what's happening. And she said, Dad, I don't know if you realize, but, everything that you're doing now is kind of considered plant-based. And I'm like,
again, not a huge point to make here, but interesting to see. This is still a family business, despite being a publicly listed company, despite everybody talking about it. This is a family operation, which is really cool to see.
My background is really private label. So, for this whole branded thing, as you know, they're really different worlds. And, that is to me been the most interesting situation that's been happening, because it's not like, I know these buyers or knew these buyers when we first went into TTCF with our plant-based concepts. I mean, we really just went there and said, here we are, here's what the brand looks like in 2017. These are our products. And from the moment that these guys saw us, it's been really, really amazing. So, to me, the question is, well, somebody says, well, how much is the brand that's driving this craze?
Now, he keeps mentioning private label here. Just in case you don't know what he means by private label, it normally means that most of his experience prior to this brand has been where a retailer, I know in particular he had been working with Trader Joe's, they will pay you to produce a product for them. They will then sell that product under their own brand. So he's not creating his own brand, he's been manufacturing for Trader Joe's and for these other retailers there. Now, with Tattooed Chef, he's managed to create his own brand. So it's a little bit different to what he's been doing previously when you actually look at it.
How much are the products that is this innovation that you guys bring that's driving this momentum? And I have to tell you that at Club, it's more important to have the innovation of the products. Costco doesn't care what the brand is. Costco wants products that sell, that resonate with their people, that really connect. And then it's a benefit if the brand is also so accepted and so incredibly, successful. So in my opinion, what happened was, it was just like all of this thing just hit at the same time. We had these plant-based food, products with this brand that people just automatically go to. But it's the products that really create the opportunity with Club. I can't sit there and say that, that I have any kind of a long-term relationship with a Club buyer, because it doesn't exist. You have to get in there and you have to be successful. That product has to do the minimum requirements on a weekly store level, and that's what it's all about. And if that happens, they'll give you more opportunities, and they'll want to see more of your products. And as long as you deliver and you do, and you're credible and you keep your word and you just keep on trucking, it's a great opportunity, and they're great accounts to have.
Okay, so that's interesting as well. I think that can be taken as a positive. He clearly does have relationships with these companies previously, but he's probably right in what he's saying about the Club membership, Sam's Club, Costco, these types of places. It probably does mean you can't just assume that his product is in those stores because he had a relationship with them previously. The product has to stand on its own 2 feet and do its own thing, and clearly it's doing that. So I think that can be taken as a positive. Product is clearly in high demand, as well as him having those relationships as well.
Okay. And all the while, so the brand launched in 2017.
Yeah.
And in the last couple of years, there's been increasing attention. I mean, attention is kind of putting it lightly, I guess, in plant-based foods. And it's really taken off across a lot of different categories. And so I was curious if you could just tell us your view on where we are in that dynamic. I mean, is this still early days? Is this, what inning are we in, I guess? How do you see this playing out over the next 5 years or so?
So it's exactly why I went the SPAC route. It is exactly why, George. So it's like I'm sitting here at the ground level of this movement in people that wanting to eat less animal. It's really, at the end of the day, people are just more conscientious. They're more caring. They want to, and so if they could if they could satiate themselves and they could be filled with the foods that they eat and they could eat less animal protein, it's where civilization is moving,
I'm just going to stop it there again. I'm 100% in agreement with him here. People are getting a little bit scared by some of these valuations that these plant-based food companies are reaching, but there is a reason for this. They are disrupting a massive industry. We're seeing massive change to people's consumer habits when we're talking about groceries and in particular meat. We are just at the start of a curve here, so whatever is happening now is going to be 10, 20, 50, 100-fold. And he actually goes on. I'm going to let this play on. He says something quite interesting here.
I really feel that, instead of me just saying, I feel like we're in the first inning or whatever, at the beginning of a game, let me just tell you that it's like, all the things that all the plant-based meat alternative companies are doing, it's just the beginning. It's like what we do with our products. So yes, we have vegetable value-added products, and we have cauliflower pizzas, and we have acai and smoothie bowls, and we have meat alternative products, but they're value-added. So we're not in that commodity value-added world, right? We're in like making bowls with plant-based meat substitute or breakfast sauce, or just, or like right now at Sam's Clubs, we have a plant-based pepperoni cauliflower pizza bowl. And so that's plant-based pepperoni that, my daughter developed and created. And it's on a cauliflower florets with cheese and sauce, and it's a really cool item, and it's at Sam's Clubs right now, just ending a rotation. So it's like, now I just see this tremendous opportunity still in frozen foods. I mean, we're not even talking about ambient, snacks and bars, and just, my God, there's just so many different fingers and arms and legs for plant-based products. I mean, I really feel that we're really at the ground level, almost like a tech company 30 years ago. I mean, this is the tech, parallel to food business, today. Plant-based foods is how I look at it. So, we're a brand, and we are,
I think certainly in terms of disruption, it is almost a little bit like that, catching that curve really early. And the way he compares it to the tech industry, it's a big industry to disrupt. The food, the meat industry, they're absolutely massive. So if they can cause some disruption there, he's probably not far wrong.
I guess the question is, how does your balance sheet allow you to sort of accelerate the forward path?
Okay, so first of all, we've talked about it in some of these past discussions, not with you particularly, George, but is that, so we started in club, and now we're in Walmart, and Walmart just really got swatted really like a couple months ago. So we got a whole bunch of new SKUs now in Walmart that I don't even think they have full distribution, and it's in over 2,000 stores, 11 SKUs. I still don't think that they've totally got full distribution yet in those items in Walmart. But at the beginning, I'm sure by the beginning of the year, which is great because that, better for you, organic months. January, the first quarter is always such an aggressive, period for better eating for for everybody. So I think we'll be fully slotted in those over 2,000 Walmart Supercenters by the beginning of the year. But we have the rest of the conventional retail. We have never.
So obviously getting picked up by Walmart is huge. It's like the holy grail for any food manufacturer in the US anyway. That's on top of the partnerships that they already have with the club memberships and Club, Costco, these types of things. Doesn't sound like it's up to scale yet, but already in 2,000 stores. That's good exposure across the US. So they're signing very big partnerships.
Gone after branded in the United States on conventional retail. We started this brand and we went after Club, Costco, and Sam's. Then we went with Walmart. And then most recently, we went after Target, and we got in there with our acai and our cold brew and dark chocolate smoothie bowls that just started also in the last 60 days. So
that's
we have
Walmart and Target and Sam's Club and Costco now as well.
By far, we have brought more plant-based innovation to the US market than any company as far as a per item concept. I mean, it's by far. I mean, when we talk to our customers, they are, they love that we just continuously bring these innovations to them. But because we have this history of working with like Trader Joe's or like Whole Foods private label, it's in our DNA. Everybody knows Trader Joe's is the innovation place, and for 25, 30 years, I've worked with Trader Joe's. So it's in our DNA to just constantly bring innovation, and that's what's going to spur the market. And that's what I have done for the last 25, 30 years.
Again, I think he's got a good point here. So far with this market, the market is booming. We've seen a lot of demand. The demand is booming. We've seen a few companies kind of making a name for themselves. But if you go and look at those companies and what they offer, they don't have a huge product range. There's not actually much on offer from them. So maybe the variation, the innovation, the size of the product range that Tattooed Chef are bringing to the table, maybe that's going to be what sort of separates them from the others. I'm going to continue.
But I tell you, when Sarah really jumped in, she took it to another level. She's incredible. So anyway, so conventional retail, frozen, innovation. Then there's all these other concepts from an ambient standpoint that we're in the process of doing, from bars and snacks and so many different concepts that we're excited to get out there. So it's just so that would be like phase two. As far as this strong balance sheet, and there's no doubt it's beautiful, and this what this SPAC was able to provide us to do. So but then in the same regard, it's like we're different in that, like most brands, they don't they don't have a company that's profitable, so we have this company that's profitable, that now that we're gonna really take a look at refocusing and just going after and maximizing our brand now. We don't have to lose money. We could sit there and not even dip into this balance sheet, this beautiful balance sheet money that we got out of this SPAC. So it's another unique situation, because typically brands that are just emerging, they have to go sow in the hole, to just get on the shelf. But because of this foundation we had already from private label and branded and the business that we're doing, we were a profitable company. So now we'll be able to take this infrastructure and these dollars and go attack this market without having to go like crazy and just take risks that I don't think that we would be taking, because people sit there and they go, oh
yeah. So it's another good thing to see as an investor. This company is smaller than a lot of its competitors, but it's already proving that it's profitable. And we don't often, how often do we see $10 billion plus market caps on companies that have never made a profit, that can't even demonstrate a route to profitability? As an investor, it's just one less thing to worry about. So that's very good. It does seem like the only challenge really for this company is scaling up their operations. But because of that SPAC merger, they've got a lot of cash sat on their balance sheet. So they're equipped there. And they've also got someone behind them with a lot of experience in food production, food manufacturing. So they're probably not going to hit all those snags and hurdles that a lot of companies do, because he's driving the ship. He knows what he's doing.
That's another point, is that our growth our guidance of this 220 million in sales for 21, which is again a pretty aggressive growth, from 20 to 21, we are not counting on, that growth, because we knew that we weren't going to be able to get a lot of these retailers online quick enough. So that growth that our guidance shows is really based on the existing accounts that we have and the commitments that we have for that business for 2021 already.
Okay, so maybe if we could further explore.
That's very interesting. So 220 million estimated revenue for 2021. Market cap of this company, Tattooed Chef, about 1.5 billion at the moment, although it's been increasing in the last few days. So that's 6 or 7 times 2021's revenue. If you compare that to Beyond Meat, for example, they have a market cap of 9 billion. Estimated revenue in 2021 is 600 million. It's about 15 times. So based on that valuation method, this looks like this looks like good value, especially with what he's just said. The president of the company tells you that, he said it's a stretch, but he's also kind of hinting that that's a conservative estimate. They're going to exceed 220 million. That's based on the customers that they already have, the retail partners they already have, and the commitments that they already have. That's not taken into account. It's to put it into context, they did 148 million this year, and they're looking to do 220 million, so it's 70 million more. But they've delivered that kind of growth in the past couple of years, so they're not taking into account the new sales channels, which I'm sure there's going to be a lot of new sales channels opening up between now and the end of 2021. So expect these to absolutely smash earnings targets in 2021.
So we have literally had zero marketing for Tattooed Chef branded products in the market that it's in today. So we're really excited now to introduce a major marketing plan starting in January. We have this plan that is really, we're basically going to hit, we're going to have 2 billion 6-second impressions that hit the market in the first 8 months of 2021 in the United States. We are going to blitz. People will hear who Tattooed Chef is now in 2021.
That's really interesting. So
now, I was expecting the way he said that to be like a social media campaign, 6-second clips, and I would have thought that'd be more their audience, to be honest, a bit younger. But in this video, he goes on to say a bit later that it's TV and radio ads, which it is. But it's not what I expected, but it's going to tie in nicely with their products becoming more available throughout the US in all the Walmart stores, the Target stores, and all the club memberships as well. That if people are hearing the brand on the radio, seeing the brand on the TV, and then they recognize the brand when they get to Walmart as well, that's going to create some growth in their sales as well. Much more than, I imagine in their 220 million, their estimate, they've just kind of counted on the product being on the shelf as it stands. So hopefully that will see them pushing past the 220 million barrel with ease, I would say.
Did I miss any kind of exciting, you mentioned advertising. I talked about corporate infrastructure. I would think that it's going to require some additional infrastructure, just launching into grocery and hiring new people and stuff. Are there any other sort of elements that you're contemplating for next year? Or am I missing any?
Look, we've been on a full court press to build the infrastructure up here since we closed this merger. There's no question. The whole sales team was really me and my daughter, Sarah. We have some brokers and stuff, but, we just have the best accounts in the United States between private label and branded. I mean, when people look at our customer list, we have the best. So, and within those companies, Sarah and I have been able to handle it. But now that, we're going to get into this other world, which, there's going to be, 50 retail chains and thousands of stores that we're going to be going after, stores, doors, whatever you want to call them. You need a lot of sales infrastructure and network, and so we've really been aggressively doing that. We've done a lot of it. We hired the marketing team. We hired a national broker, one of the 3 largest in the U.S. We hired our national sales manager, ex-Coca-Cola person. We've hired all kinds of people that are, our e-com business that launched, and the focus that we're going to have on e-com and the importance of e-com, just from people knowing who the Tattooed Chef is and knowing the products that we offer and the infrastructure that now we built for e-com. I mean, it's let me tell you.
So it sounds like they're happy to bring people in as well. Although it's still a family-run company, they've sourced outside agencies, people from Coca-Cola. So good to see that they're happy to delegate and take help where it's needed, because obviously when you're going to scale, they're going to need help. You can't do it all as daddy and daughter. It's not gonna work.
I think that 2022 can be like a really awesome. That's when a lot of the fruits of our labor that we will aggressively putting in place for 2021 will happen. What's beautiful is that because of the momentum we had, we're already going to have some great growth in Tattooed Chef for 2021, right? So it's like we're already saying we're going to grow by $70 million, which the majority will be branded, because we really were only focusing on branded, and we've only focused on them for the past couple of years. So and that's what's beautiful, is because we're already going to have that. We already have that growth in place for 21 with our existing accounts. So then, given the opportunity to put things in place and take advantage of all this conventional retail, those fruits of the labor will start to happen in 22. But there's also the whole European opportunity, because of our presence in Italy with our plant. And the whole management team we have in Italy, 100% of the products we're producing in our plant in Italy are coming to the US right now. 100%, because the demand has been so amazing in the US, it's been all coming here. So, we have all the intentions now to build a marketing and sales team to go after the whole European market, because we're there. We know who those retail customers are in Europe also. We feel that, this brand really connects with everybody. And so we're excited. And I really think that a lot of these things that we're putting in place today will come in 2022, just because.
So based on the fact that they already have a manufacturing plant in Italy and Europe and half a team there, I think obviously they're going to expand into that market at some point. And from watching documentaries and stuff, the demand in Europe for these types of products is there. It's the supply that's not there at the moment. So the sooner they can do that, the better. Now, they did go on, I'm not going to go through the whole video here, but they did go on to discuss manufacturing at the moment. They keep 95% of it in-house. They don't outsource very much, and they want to continue with that in the future. They also confirmed that they already have the capacity for that $220 million they're expecting in 2021. They have capacity for that already. That's not going to be a problem. They don't need to add new manufacturing plants or anything like that. They are still producing some products for companies like Trader Joe's, the own label stuff, which is not sold under the Tattooed Chef brand, but that's not going to be a focus for them anymore. They're really going to push ahead and ramp up production of the Tattooed Chef brand. So in conclusion, without getting too worked up and too into valuations, is it overvalued, undervalued? As a long-term play, this is a good play. They have a solid brand. They have big retail partners already. They're clearly working on more retail partners, and I'm sure there'll be big announcements shortly. They're innovating. They're working on more products. They've got a big product range already. they have 2 huge markets that they have access to already. They don't need to expand really into those markets. They've got the infrastructure in place already in both of them, in Italy and the US. They have that capital available from their SPAC merger, so their balance sheet looks really good. And most importantly, they have a good, experienced person at the helm of this company. He knows what he's doing. He knows what he's talking about, this guy. So I have actually already added this to my portfolio after watching a couple of these and looking at the numbers of the company. I am going to be adding more of this. I'm going to make this into one of my bigger positions. I definitely see the potential here with this one, but primarily because the guy behind it, I think he's going to drive this company forward. He definitely knows what he's doing. So that is everything for today. Let me know your thoughts on Tattooed Chef, guys, if you are holding this one. Thank you all for watching, and I'll see you next time.